Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. Welcome to today's Top Stock Pick segment. I am Jeremy Mullen, and I am here with Tracy Reinick, who will be following me with her pick. But first, let's get to CHWY. That ticker is, of course, for Chewy.com. This stock is a Zacks ranked #1 strong buy that is a leading online destination for pet owners. If you have pets, you probably have used Chewy.com, especially during COVID. Chewy benefited from the pandemic as the company posted record profits through those COVID lockdowns. Now, in 2020, Chewy went from $30 a share to $120 a share in just under a year. Now, the stock pulled back aggressively in 2021 and printed an all-time low recently in April. And when the stock fell under the $15 level, that was all-time lows. But a recent earnings report has changed that momentum, and the stock popped 50% off those recent lows. So question is this the beginning of a larger turnaround for the company and the stock, or is this just a bump in the overall trend lower? So let us dive into Chewy and decide that for ourselves. Okay, looking at the Zacks profile page here, I have Chewy up. As you can see, it's a Zacks ranked #1. Some factoids about a company. Chewy is headquartered in Plantation, Florida. They employ 18,000 people. Looking here, we have the Zacks style scores. We have A in growth, A in momentum, D in value. Why does it have a D in value? Well, PE is at 24, so a little high for some people. The market cap is at $10 billion. This company has been was founded in 2010, IPO'd about 5-6 years ago. So it's still quite young. They're trying to get their groove. And if we look at earnings, we can see a nice stretch here, right? But the stock kept going down. Well, the recent quarter changed that. We finally had a nice positive reaction off this 48% EPS beat. Within that quarter, it was Q1. They saw revenue slightly above the estimated $2.85 billion. Q2 revenue was projected slightly above expectations. In Q4 revenue, they affirmed their guidance in a range of 11.6 to 11.8 billion. That was just slightly above the 11.7 billion. What was the big deal was adjusted EBITDA margin. Now they raised that to a range of 4.1% to 4.3%. This is up from the previous 3.8%. And so their adjusted EBITDA was 162.9 million. This was an increase of 52 million year over year with a margin of 5.7%. This is up 170 basis points from the previous year. Gross margin improved to 29.7%. This is a 130 basis point increase year over year. Now, in addition to this improvement in margins and EBITDA, they announced a share buyback program of up to $500 million. So they're going to be buying some stock back. Some comments from the management. They emphasize strong net sales and a record-breaking adjusted EBITDA. This reflects their successful strategic execution and customer value proposition. Now, what matters is what the analysts are saying. So let's take a peek at that. And if we go down here, we can see that analysts are raising estimates across all time frames, and they're in agreement that they're lifting numbers. Okay. Now, if you come down here, you can see the trend going higher was kind of in place, not for next quarter, but the other time frames we were in place. Then we had earnings, and now we're starting to lift a little higher. So you can see for that current quarter, we have about a 30% jump here, and for the current year, about a 4% jump over those last 90 days. So pretty good movement on the estimates. Now, with that, their price targets are being lifted as well. I have a couple analysts who lifted pretty aggressively since earnings. Needham, they maintained their buy, went from $25 to $30. Morgan Stanley went from $28 to $30. Wedbush went from $25 to $28, but JP Morgan, they saw the highest magnitude of price target. They maintained their overweight and raised from $22 to $28. So these price target hikes reflect a broad confidence in Chewy's continued strong performance and growth potential in the market. Those are some nice price targets from where we're trading now. Let's see how we might get there. I had that chart, and if you remember what I talked about the stock going from about 30 to 120, there's that move there. And then it just gave up pretty much everything in the following year. So We went sideways for a while, and then late last year, there was just nothing left for the buyers. They kind of gave up, threw in the towel, and printed a new low under 15. However, here's this quarter. So let's zoom in and see where we can go. Well, if you guys like fibs like I do, if you draw from these highs back in December to the recent lows, we had a fib break that was about here. I took the line off, but our extension is here. So that's 31.65. So if you're long, your long-term target is you're looking for this extension to take profits in. Now, that's a far ways up. Let's see an entry, how we can get into this name. Okay, so from these recent lows before the earnings, I like to draw the lows to the recent highs and see if we can get a pullback into this area between 19 and 20. Right there, we have the 200-day moving average, which is still moving lower. We have a 21-day moving average, which is really moving higher faster because of prices up here. Then we have a 50-day moving average, which this gets above the 200-day, blue line over the red line, we have what's called the golden cross. And that's really what I'm kind of looking for, is a mix of support between 19 and 20, that golden cross. My first targets would be about 26, and then I'd look for those longer term targets at 31. So just to review, Chewy reported strong Q1 results and surpassed revenue forecasts. The company raises EBITDA margin outlook and initiated a 500 million share repurchase program. The chart looks good for the first time in a while, and I'll be watching this one for an entry over the next month or so. And that's it for Chewy. My pick, CHWY, and here is Tracy with hers.
Thanks, Jeremy. I have a great number one rank stock today. It's been hot all year long. You all know it. It's come up from the ashes in the retail side, and it's Abercrombie and Fitch, ticker ANF. And Abercrombie, like I said, was kind of left for dead years ago as the brand kind of went out of favor with young people. Its target audience has always been teenagers into early 20s, but new management has really turned around their product selection, and the brand is hot again with young people, probably actually up until their 30s now. And they recently added an interesting new little shop within the shop that's selling really well. It's called the Wedding Shop. So apparently they've had a lot of customers say, hey, we're going to these big weekend weddings or destination weddings that are several days in a row. We need outfits and we want you to tell us what to wear. So they've started this in all of their stores. It's also online, and they're also carrying suits for men that goes along with the wedding theme. So this selection only rolled out in March. It is doing very well, better than expected. And we're only kind of right in the middle of wedding season right now here in June of 2024. So they're seeing positive results just from that little mini collection, but also dresses are selling well for women. And they didn't used to carry a lot of dresses in prior years, but now that's a big part of their selection. And that is really giving the company a boost. They had same store sales last quarter up 21%. It was driven by the Abercrombie brand, but Hollister also saw double digits as well, but just not quite as hot at Hollister. So why does it have the number one rank? Let's take a look at the data to see what the analysts are seeing here and how it's gotten this strong buy recommendation. So on Zacks.com, if you put in the ticker, you'll see obviously that it's a Zacks number one right there in front of you. And you can look down to see the style scores too, which are also quite excellent. It does have a B for value, even though the stock is up big. It's got that growth component because the earnings estimates are on the rise. And I'm going to show you in a minute the nice growth that it has. And it's got momentum because the shares have been red hot. So it has overall style score, a VGM of A, and that's the highest style score. So I'm liking all of that. Scrolling down, this is on the detailed earnings estimates page. You can see that it's trading with a PE of almost 20 right now. And that's not dirt cheap, but it's good enough to get it this, B for value. That's pretty high on the style score. And it's not overly expensive on the PE basis. Now, scrolling on down further, you can see on the sales side, sales expected to be up a little over 10% this fiscal year, but it's really earnings that we're concerned about with the Zacks rank. Earnings growth of 47% this year. They only made 628 last year, expected to make 926. And you know what it means if we've got a number one rank. Like, we're going to see this. We're going to see 5 estimates higher in the last 30 days. That's after its earnings. And another 5 for next year, too. So the analysts getting bullish even about the future there. Scrolling down, you can see they took it from 759 all the way up to 926. And part of that reason is because if you scroll down a little further, you'll actually see this last earnings report and how much they beat by. And they actually beat by 48 cents here. So that was quite a big beat, a 28% beat. And so just including that, the analysts had to raise their estimates. But guidance is looking very good from Abercrombie right now because they are still seeing this momentum in the underlying business. And so they were being a little cautious and maybe now lifting a bit of that cautiousness. But let's take a look on the price to consensus chart. It's my favorite, and it really tells you what's going on with these shares. Up and away. So year to date, 2024, Abercrombie is up 107%. Yes, it keeps rising. Will it keep going forever? Obviously not. But for right now, shares remain red hot because it is actually producing. It is actually seeing that 21% same store sales comp that is coming off of low levels last year, but still very few retailers able to do even 10% comps, let alone 21%, especially given how hot it was during the pandemic. So this is impressive. The street is rewarding it. Everybody's piling in. We always like a good hot retailer, and this is one. And you can see those earnings, the consensus estimates up and to the right, very dramatic and steep because the analysts are having a hard time keeping up with the story here too. I'm liking this. It's been a long time since we had an older retailer kind of find its footing and break out again and get on trend. And Abercrombie & Fitch has done that. So there's a whole new generation of shoppers discovering this brand, and they like what they see along with Hollister, and that could trend for a while. So I'm liking Abercrombie & Fitch on the retail side. Yeah, it's apparel and accessories, but we all need new clothes at some point. And sometimes a retailer just gets really on trend, and that's Abercrombie. So ticker ANF, this week's Zacks #1 rank strong buy, along with Jeremy's Chewy, makes for an interesting retail and consumer dynamic this week. So be sure to get all of our top stock picks of the week. There's one every week. You can get them on YouTube. Just go to Zacks.com/YouTube. Check out all our videos there, but be sure to get those top stocks.